And we're live. Let's see if my link works. Well, my link doesn't work, which is kind of a bummer. Cool. Let's see. All right. Well, this is Merflauge FX. That's how you pronounce it, Merflauge FX. I should have done this a long time ago. Started live streaming, putting up videos of trading. But better late than never. First and foremost, I'm an ICT student, inner circle trader, Michael Huddleston. I was in the mentorship in 2017. I consider myself an OG member. Everything that I know about Forex is from ICT. The way that I trade, from the vocab I use, from everything is from Michael Huddleston. The language that I use, order blocks, liquidity voids, turtle soup, everything that I know is from him. So if you'd like to go to Inner Circle Trader on YouTube, you can get his free content, and he's actually releasing paid mentorship videos that I paid for back in 2016 and 2017. I paid $150 a month. Best $150 a month I've ever spent. Trying to figure out my URL to share. Let's see if this works. All right. So I'd like to say first and foremost, I see a lot of content creators on YouTube who claim institutional banks and all these orders and all these terms, and they're on 1 minute, 5 minute charts, and it really just disgusts me because I can just tell immediately that they don't know what they're doing. I don't claim to be the greatest trader, but I am a profitable trader. I think that's what sets me apart from a lot of people. A lot of people be in here and they'll claim, join my Discord, join my mentorship. And they're just trying to get paid, affiliate links and all this other garbage. I'll never ask you to join mentorship. I'll never ask you for $1. I won't ask you to join my Discord. All this here is free education from what I've learned over the years. There is some things that I can't disclose due to an NDA I have with ICT. I'm going to try to keep everything that I say that he has on his YouTube that you can go check out yourself. I am an FTMO trader. I have a $200,000 account that I have with him that I will show here in a second. Now I don't make hundreds of thousands of dollars trading, but I do make, some money. So let's go to this real quick. Again, it's not hundreds of thousands, but I have made money. 1%, 2%, 2.5%. Not big trades, but enough to where I believe I should have some kind of credibility. I'm not going to promise you to turn $1,000 into $100,000 in a month. I'm not going to sit here and try to sell you anything. On the other hand, I am not an accredited investor. I cannot give trade advice. I'm located in the United States. Everything that you see here is going to be on this demo account. For one, I usually use, why is that showing up? I usually use this dollar chart to map out my trades. So every trade that I take on this live stream, on this account, will be in this demo account. The numbers might change. Sometimes after a few months, they make you open up a new account. Now, I'm not going to sit here and say that every trade I take here is going to be on my live FTMO account, but because legally I don't want you guys coming after me saying, oh, I took his trades and lost money, because you should not be taking any of my trades. I'm just trying to put out the education I learned from ICT over the years. I've been trading since 2015. I've only really started knowing how to trade about 2019, 2020. And with that being said, let me see. Let's see. How is... Okay, so I'm sure you guys have seen, if you're trading or looking at the market, we opened up and the dollar went up about 150 pips, which is a crazy amount. Right now, if anyone's saying that they're trading, they're kind of gambling. Nobody knows what's going on right now, especially with the Fed raising interest rates, the Federal Reserve for the U.S. economy. Mr. Powell, I'm sure you guys all saw this move. We dropped almost 500 pips from Sunday's open. Really incredible. We've come up and we've had a pretty decent pullback. I say pretty decent pullback. We pulled back 450 pips, which again is why I like to say that they're gambling. If anyone's trading right now, they're gambling. Michael's taught me a lot. He's taught me when to be in the market, when to not be in the market. This is a time where you really don't want to be in the market because it's so volatile and you don't really know what's going on. Now, that doesn't mean that you can't, maybe scalp or, if you're going to risk anything in this market, Me personally, I'm probably only going to be risking 0.25%, if that. Now the dollar's in a extreme bullish trend. I mean, we have a almost 700 pip move in the last 2 weeks. But even before that, I mean, you could see, oops, you could see it's just been going. August, we had a little pullback there, but now what do a lot of people say? Follow the trend, but do they really know what that means? I don't think so. In this uptrend, you can sell the dollar. Now you can't trade the dollar by itself. You have to trade it against, foreign currency or gold. But you could be selling in here the dollar again. You could be buying foreign currency and you can get some wins, You could buy foreign currency here, but overall you want to be selling foreign currency during this time. The dollar is extremely bullish. Now, we have had some unprecedented gains up in here. And to be honest, me personally, if I had to trade, if I had to put a gun to my head, I'd like to see how we react right here. So Michael has a concept of order blocks, liquidity voids, liquidity runs, taking buy stops, taking sell stops. And let me put out this link again. Let's see. Like, I'm watching a live streamer right now, and I'm not going to put their YouTube out there, but they have no idea what they're doing. And I get it. Like, I'm trying to get followers. They've got followers. They've got a lot bigger audience than me. I mean, I have nobody. There's actually nobody in here right now, which is fine. Streaming is all about the long term. But my link is not working to put it out. It's very annoying. But hey, I guess all I can do is put it out like this. So honestly, I'm probably not going to be trading much this week. Again, it's very gambling-ish type. You could demo trade, but trades could go against you in a way where it'll make you mentally second-guess yourself. It might make you not want to trade. It might make you think you can trade. It's just kind of dangerous. Now again, all the language that I use in here when I talk about bearish order blocks or turtle soups or liquidity, it's all from ICT. I don't own any of this. I can't give financial advice. So if you're watching this in the future, hopefully there's hundreds of thousands of views on this video. So we're looking at the dollar here. We had a massive run up. We retraced back, consolidate a little bit in here, but here is what I look for. Now, even though the dollar has been extremely bullish, on the short term, to me, this could be bearish, and I'll tell you why. Let me give the delineation for days. So we opened up here. So in here we have London open. I can tell you exactly. Okay, yeah, so we got London open in here. Now what I like about this is one of my models is a turtle soup. So if I believe this is bearish, we have a turtle soup here. We take out equal highs. We take out some buy stops. We drop below a swing low, which could be a break in market structure. And then we retrace back up into a potential bearish order block. If you don't know what a bearish order block is, you can go to ICT's YouTube channel. He's got a whole bunch of videos on it, but in a nutshell, there are times when an up close candle before a down move is where there was previous selling, and a lot of people like to say institutional selling, the banks are selling, and people don't know what they're talking about. Yes, banks could be selling, but in a 15-minute candle, it's tough to say that banks are selling here. Banks are more going to be selling on a higher time frame. They sell over a period of time, or they buy over a period of time. Now, me, as an ICT trader, I would, in a situation where I'm looking to trade, this could be a trading model. Turtle soup, takes out a swing low, breaking market structure, at least in the short term. The dollar would be selling into here, and your target could be right here, this fair value gap. It could be down here, even though this filled in very nice off of the open. Now, with that being said, you can't trade the dollar. You know, I could trade it in this demo account, but in real life, you can't trade the dollar. It's got to be against something. Even if you look at like Bitcoin, which I don't trade, and I don't recommend trading personally, you'll see it says Bitcoin USD. It might just say Bitcoin, but it's really Bitcoin against a dollar. If you think that this is a valid bearish order block, then in your trading model, this would be another, let me take this off, bearish order block that you can look for the dollar to react off of. So we have the bodies of the candles respecting the mean threshold here. We have a nice immediate move closing below this last up close. So if you were looking to trade, this could be validated. So you could be selling the dollar in this area and look for these equal lows right here. You could be looking for this to get filled in. You could be looking for down here. I have this area labeled from before. I can go back to it and what it is. So let's look at the euro. Again, I'll just do this so you can see the Sunday open. Sunday open, boom. We dropped hard. Not as hard as the pound. I'll show you the pound. It's incredible. We fell 140 pips, came back up. Again, I don't recommend trading this because right now it's just gambling. If I were to trade live funds this week, let's see. Let's see when we got some news coming out on Forex Factory. We got some news today coming out at 9 for the euro. And if we look for this week, now you know what I can do? We could look at that together. Okay. Powell speaks tomorrow morning. Okay. And we have a lot of news tomorrow. Wednesday, pretty reasonable. Yeah, this is actually going to be a pretty dangerous week to trade. Friday's going to be light. I should say Friday London's going to be light. Yeah, we should see price be moving pretty, in my opinion, pretty violently. But let's go back to the dollar here. It's very dangerous trying to pick a top in an extremely bullish market like the dollar is. I wouldn't recommend it. You could scalp, like I said, if you took this trade where you bought foreign currency here, it obviously would have worked out. So if we look 515 to, let's say 730, let's look and see what the euro did there. So 515, the euro was down here. You got 75, 80 pips if you got in at the low, got out the high, which doesn't happen often. If you do, it's lucky. I mean, I've seen ICT call the weekly high and low before Sunday's open, which has some luck to it, but if you believe that there's an algorithm controlling the market, which I believe there is from what ICT's told me, you can predict things like that, but to get it precise, there's going to be luck involved because your broker is going to have some slippage points in there. The algorithm doesn't have to perform exactly. It could overshoot something by 5, 10, 15 pips, but in general still continue with the trend that you're thinking. So, we had a nice run up there. Now the pound, let me tell you something. This is something impressive. I like to call this Brexit 2.0. It's not as violent as Brexit, but on the Sunday open, we dropped 500 pips, and then we came back up pretty quick to fill in this fair value gap, as we call it. 515. All right, so you notice that here, let me just delineate this. Hello? Where am I at? I have no idea what's going on right now on my computer. That's very weird. That's very weird, but hopefully I'm not being hacked. So we got 515 here. We got 515 right there. And we got 515 right here. So let's do this real quick. I'll clean up this dollar a little bit. Oops, too much there. Let's take this out. Let's take that out. All right. So hopefully you're seeing the difference between all of these. Let me get this cursor on all of them so I can just move. So when the dollar was coming up and taking out this high, at the same time, the euro was not taking out the low, right? So we have a higher low there, but the euro was taking out the lows here. So in our mentorship, we call that a SMT divergence, smart money. It's actually, I mean, it could have a couple names to it, but I like to think of it as, I just call it an SMT divergence. So higher high, lower low, higher low. So in theory, you could look at this as the turtle soup buy. You could look at, oh, this has more relative strength than the euro. You could buy. But everything is based off the dollar. That is the key. Most of the time, in general, if the dollar is going up foreign currencies going down. One of these might be falling or going higher more than the other, and that's why we would look at the beast, right? So this is euro pound, called the beast. So since euro's first, that's the strength of the euro compared to the pound. Also GBP USD, the nickname is pound. Euro USD, nickname's fiber. That's what I'll be calling them. So since the euro was going higher in the euro pound, that's why during this time, that's why the pound fell off 500 pips and the euro only dropped 125. So the relative strength is in the euro. So if you were looking to sell foreign currency and you looked and you determined beforehand, I believe that the beast is bullish, you would not want to sell the euro compared to the pound, because according to this chart, the pound is weaker. Now, I didn't trade any of this. I'm not claiming I traded any of it. This is really just my thoughts on the market currently. There's buffer. Yeah, probably because I have so many tabs open. Let me close some of these tabs. I'll have to check back after this stream to see how it was going. So on that potential dollar short, we're coming back up in here. I would not negate this as a dollar sell yet, even though this candle looks scary. As long as it respects the mean threshold, which is the 50% of a body of a candle, ICT considers that the mean threshold, it could still reverse. Now, if we get above this high, that's when you have to consider, I'm going to take this off. That's when you have to consider that since we are in a bullish market, that this could just be continuing up. There is something called an institutional order flow entry drill, which is basically, if you would consider these down close candles a bullish order block, price would have to come down into the bullish order block to continue going higher, or as a reason to go higher. But there's also something called an institutional order flow entry drill, which all that means is under this candle's low into this fair value gap, the second it goes below here, if you're bullish on the dollar, the second it goes below here, you could be a buyer of the dollar or be selling foreign currency. Again, I don't recommend either one because right now no one knows what's going on. And actually, let me see what my fellow streamers are talking about. So we'll see. I mean, if it does continue lower, it'll show that these concepts potentially work. If they don't, like I said, we're in a bullish market for the dollar. So let's see if there's an SMT here in the dollar and the euro and the pound. So we do have a lower high here. Let's look at those time frames. 7:15 and 9. 7:15 and 9. So and 7:15 and 9. Okay, so we do. Man, no, forget that. So the euro has a lower high, pound has a higher high, and the dollar has a higher low. What does that mean? Well, in the terms of ICT, if this was a normal market and we believed that with this being a bullish trend, I would look at this as strength on the dollar, weakness on the euro, and the pound is basically doing a turtle soup here. So me personally, we're probably looking for this to, so when it comes to bearish order blocks, bullish order blocks, up close candle, then a violent down close. Then we come back up. This up close candle is respecting at the moment this up close candle. So this could be validated as a bearish order block. We have rejection. This candle up here, if this candle respects this up close candle, this could be considered a bearish order block and for price to keep going lower. So if the euro pound is going to be going lower, that means that the euro here is weaker, which means you, in theory, could be looking for sells in the euro. Now, everyone has a different trading plan. Everyone's going to be looking for different things. Some people will look for a sell breakout below here. Some people would want it to retrace up higher, maybe into a potential bearish order block, even though, in my opinion, these wouldn't be considered bearish order blocks because you have bigger bodied up close candles here. So this technically would be the bearish order block. We also have a potential breaker in here. And if you don't know what a breaker is, again, please go to ICT's YouTube channel. But this could be considered a breaker, which actually, if this was a normal trading day, this is what I would look for it to close below here and then become a sell later on, for, this low or somewhere in here. I'm not trading. Not even going to be demo trading. Let's see what my buddies are doing over here on YouTube. Let's see if they're taking some trades, which they shouldn't be. This guy's a clown. I'm watching someone right now who likes to go on the 1 minute chart and talk about market structure breaks. And if I were to watch his stream for 20 minutes, he would give you a couple buys and a couple sells in the same exact pair, which is dangerous for new traders. Which is why I want my channel to, obviously I want it to blow up, but I just want to give people the right education on how they're supposed to be trading. You shouldn't want to have your stop immediately to break even. There's another YouTuber I watch where they will take a sell and 10 seconds in, they put their stop to break even. They give no leeway to price for move. They give no leeway for price to move. And they'll go 10 pips in profit and they'll close half the trade. And then they'll consider it a win after it goes up and takes their stop out, even though their take profit was 50 pips away and their stop was 30. They didn't give any room for price to move. You need a move like this, an extreme move in your favor in order for that person to take profit. And they sit there and they do their celebration and they go, yeah, fam, we hit profit. And it's like, no, you got lucky. That's not trading. Trading is being confident in where you think price is going. I like to trade on the concept of, and again, this is going to be all ICT. It's called the power of three. The power of three is this. Oops. Forget this for instance. Okay. Let's make it a little more. Let's say this is a daily candle. So like one of these candles. The reason why this candle is red, it opened up here. It came up a little bit, drops down, creates the low of the day here. If this was a daily candle, I know it's a 15-minute. So that's all this is. Price opens up here, goes above the opening price, shoots down, creates the low of the day, comes off the low, and closes over here. Now in theory, this candle would be red. And if you're going to trade that way, if this is the daily candle, the open, the high of the day would most likely be in London. It could be in New York. You know, London can create a short-term high, consolidate, take out London high, drop lower in New York, and then close in New York. It doesn't always have to London, New York, close in New York. You could also have a reversal in New York. It's complicated. It's not as simple as how I'm explaining it, but in a way it is that simple. Because if you're looking to sell on the day, right? If you believe that your bias for the day is that it's going to be a down day, then you're looking to sell anything that goes up. Because if you take ICT's concept that after price opens at midnight and it's going to be a down day, price is likely to only go up about 30 pips or so. It could go more, it could go less, but in general theory of trading. So these are daily candles, right? Price opened, came down, went up, closed. Power of three. Open, down, up, close. Bullish. Same thing here. Open, up, came down off the low, close. Down day. So if you're looking at this day to be a sell for whatever reason, your bias says it's going to be a down day, you're going to be looking to sell anything that goes above price. You're going to be looking for a turtle soup. You're going to be looking for a bearish order block up here. You're going to be looking for a reason to go short. If you have the daily bias correct, you don't have to get a perfect entry in order to make money. You don't even have to be right to make money. You could think that it's going to be a down day, and if you trade with a specific plan, you could make money and still be wrong. You can take partials, you can take some profit, move your stop loss, get stopped out, but still make money. That's why you don't chase price, right? Like for instance, right here, this day close, it's up. Breakout traders who like to buy above highs, they get smoked. They get smoked right here. That's why I like turtle soups. The thought that the algorithm is going to take out buy stops or sell stops and then continue the other way, I love it. Because look how often it happens, right? Oh, I'm going to break out and buy it up here. You lost. Oh, I'm gonna sell down here. You lost. That's people who don't know what they're doing, which is a lot of these YouTubers don't know what they're doing. And it really grinds my gears, Family Guy. It really grinds my gears that they give this false hope to people and they might get lucky that day. And then they think, oh, this person's the greatest. Meanwhile, they're trading on a 5 and 1 minute chart. You tell me this. Do you think that this 1 minute chart shows the bias of a 4 hour? No way. So the dollar is bullish, but if you go on a 1 minute and you look at this, you're going to go, oh, the dollar's, look how bearish the dollar is. Yeah, the dollar's bearish, huh? Yeah. I mean, right now, well, you know, the only time you should be using 1 minute, 5 minute, 15 minute is if you say, okay, I think the dollar's going to go up, so I want to get the best entry possible that I can. So just in a theoretical, if you thought the dollar was going to be bullish, we've got some equal highs in here. Price drops below, takes out these sell stops into a potential bullish order block, and it runs up. Now, like I said before, with this quote SMT divergence, look what we're seeing. We're selling off. This isn't selling off as much as the euro. And why is that? Because right now, price is respecting these bearish order blocks and going lower. Now again, I'm not in this, I'm not trading this, but that's the premise of ICT concepts. We don't chase price. So if this was a normal day and instead I see this, and I see that, and I go, you know what? I want to sell. But I'm only going to sell when price was down here. Maybe I wanted the institutional order flow here, or I wanted price to come down into maybe what I misconceive as a bullish order block, but it's not because these down closed candles are inside of here. So, oh, I missed this. So I wouldn't trade it. I wouldn't chase price. I used to. I used to want to be in every single move, but it's not realistic. There's moves every single day. Let's see what gold's doing that you're going to miss, and that's part of trading. And there's going to be moves every single week. You chase price, you get hurt. I've lost a lot of money in the past. I've had a lot of frustrating nights, and you don't need to have it. Yeah, gold's kind of, See, let me go on a daily chart. So gold is bearish, right? So gold is inverse of the dollar. Excuse me. But the problem with gold can do whatever it wants. And I'm not going to go to the dollar in specific, but during this time where gold is, in theory, some traders will give you the, oh, look, it's bullish. It's, this, not, oh, and when it breaks below here, we're going to sell. Okay. Well, what happened to your sell here? You lost. What happened to your sell here? Oh, stop shot again. That's why trend lines don't work. I don't trade with trend lines. The only time I might trade with a trend line is to see what retail trading is doing and go against it. Sometimes these trend lines will work. But if the trend lines work 20% of the time and ICT's concepts work 80% of the time, and I'm not saying that is the case, but if you have a trading plan with ICT and you have an 80% win rate, would you rather lose on the ICT concepts 20% of the time when retail wins, lose 20% of the time when retail wins 20%? Of course you will. If I told you that you can go into a casino and gamble, because this is gambling technically, it's kind of why I like it, but it's a gamble that you can get an edge on the house. If I said to you, hey, you can go play blackjack at a casino and you can win 65 to 70% of the time, would you do it? Of course you would, because you have an edge on the house. All these people talk about smart money trading, bank trading. They have no idea what they're talking about. I know more than them, but I don't know as much as ICT, and I've been with him for what? Coming up 5 years? That man has mastered his craft, and I still learn from him all the time. I don't believe that I've mastered the market, but I know more than 99% of these retail traders who have no idea what they're doing. Hey, my one viewer who's been here, I appreciate you. This 1 minute chart gives me agita. Okay, so let's go with the premise that with the SMT divergence that we saw over here and here and here, let's say that this is bullish. Let's just say it's bullish. If this is bullish, got a little stutter right there, then this, again, I wouldn't technically classify this as a bullish order block because these down close candles engulf it. But you could look at that as well. It was a down candle in an uptrend, so there was buying in here. So we should see price continue higher if this structure is bullish. If this SMT divergence is valid, we should see this continue higher. Or if this fails, maybe we get that institutional order entry drill, fill here, and continue higher. See, the funny thing about price is Michael's main concept is time and price. So you can see a perfect bullish order block that's got a fair value gap, that's got optimal trade entry, and optimal trade entry is simply the fib. You got 61.8%, 70, and 79%. This is the optimal trade entry. If price is going to retrace back into the range, and let's just say this was, bearish, even though he likes to use the bodies of the candles, but we'll just say high to low. If price comes back up in here, it should be a sell. That's all it means. If you have all these confluences and they work out, but it's not during the right time, you don't trade it. So I trade London session and New York session. Now my London session is, I'm trying to think if this is in the NDA. We'll go with ICT's London session, 2 to 4 a.m. So that means that I'm not trading at midnight. I'm not trading at 5 in the morning. Now, if there's news coming out at like 5:30, then you can justify a trade because news events are just an excuse for price to be manipulated. They already know the numbers, right? Like when those CPI numbers come out at 8:30 a.m., you think nobody knows those numbers? Someone's got to know, right? Or how are they putting them out? The market already is getting ready to react to the numbers. That's why if you know how to read price before a major news event, you could take advantage and you can make a pretty amount of pips. Ready? Look at this. Oh, wow, look at that. Interesting. That bearish order block is currently holding. The euro is falling more than the pound. Now, how did I lay that out? Now, I didn't trade it, so I'm not, oh, look how great I am. But it just shows in live time that ICT's concepts potentially work. But again, we're in such a weird time where I don't expect them to work. See, that's the problem. People see things, they go back in the charts and they see things work and they go, oh, this is great. And then they try to do it live and it doesn't work because not everything is a bullish order block. Not everything is a bearish order block. Not every gap works. And I'll give you a little example right here. Where'd it go? Okay. Somebody doesn't know what they're talking about. And I actually saw this clown, I'll call him, on a live stream. Right here. This is a fair value gap. The reason why? Come on. This candle's high and this candle's low. There's nothing, as ICT says, there's nothing painting inside this candle. So there's a gap, and that gap can be represented right here. So this box is on this high and this box, so right here. So someone who doesn't know what they're talking about might say, oh, price is going to come down in here, oh, whoops, and then bounce off and go higher. And what happens? They get smoked. Because it doesn't work all the time. There's only certain times where certain aspects of price is validated. And that's why if you follow Michael, he gets so irritated when people try to steal his work and they don't know what they're talking about, because they're informing people who think that they know what this person's saying when in reality they don't. And now they're getting the wrong information. It's almost like, and I hate this word, it's almost like misinformation, where somebody who's so confident in what they're talking about, someone who sounds like they know what they're talking about because they're a good talker and you buy into it. It's like a sleazy salesman who sells you that car and you think you got a good price on it, but in reality, you're paying 26% interest on it. And you think, wait a minute, this $15,000 car is going to, at the end of my payment, I'm going to be paying $32,000 on it? Well, how'd that happen? He was such a nice guy. Yeah, he was, huh? So here, at the moment, it's only a 15-minute candle, but there's at least a reaction off it, right? Which is cool to see. If it goes up higher, that'd be cool. But even here, this is what I'm talking about, where you can be wrong and still make money. So let's pretend that this isn't a 5-minute chart. Let's say these are daily candles, because price is all the same. I forget the word he uses. I blanked out there, but if this is a daily chart, each candle's daily, and you said, you know what? Up candles before a big move down, this could be a bearish order block. Oh, and what else do we have in there? We have a fair value gap right here. Look at that. Oh, that's cool. Oh, and then what else do we have? High to low. 79%, which the bodies here actually respected. That's 3 confluence I see. Now, if you sold this on the daily and you looked for sells in here on the hourly or 15-minute, you could make money in an overall, on this, let's say slightly uptrend. You can make money on that. You know where you don't make money? Oh, well, I didn't buy down here and I didn't buy over here, so what I'll do is I'll buy above this high and this high. Yeah, and guess what? You get smoked. Hey, I'm not ICT. I don't claim to be ICT, but I promise you, I know more than these fools that, once again, right here, I'm watching this fool, and I don't even want to say their gender, because they have a pretty decently big following. Oh, I muted that just in time. Let's see. Did they take a trade today? No. So actually, you know what? I don't even care. This person is doing a $5,000 account to $50,000 account. And this person trades, moves their stop loss to break even 10 seconds into the trade, where they risk, I want to say like 5% per trade. And they have no idea what they're doing. And right now, they've got 800 people watching them. And, she likes to throw out these ICT words, and she doesn't give them credit. And she doesn't say that she, created them, but she puts out the persona that she did. And these people just eat it up. And it makes me sad, to be honest, because she doesn't have their best interests at heart. She might think she does, but she doesn't. Just because a crazy person on the side of the street thinks that the innocent person walking by is a person that's coming after them, does not justify that crazy person attacking that innocent person, right? You know what I'm saying? Does that make sense? Well, I've been going almost an hour. Let's see what price. Let's see how. So we'll see. I'll probably come on here. Maybe I'll come up on here in an hour and a half and see what happens on that 9 o'clock news. But of course, I broke my blue light glasses, and my eyes are hurting. They're getting a little strained. So we'll come back. And you know what I'll do? We'll do this. We'll label the chart. We'll see how price reacts. So we'll see if we come up here. Now, if we don't, let's say we're wrong. Let's say price is going to go lower. I would expect, whatever price happens, I would expect price to go below here. And then if these are the last up close candles before a move down, I would expect price to respect these up close candles moving forward down, because these are equal lows. So they could be used to shoot for liquidity. But again, I don't know. Appreciate your time. To my viewer that was watching this, I appreciate you. Have a good rest of your day. Peace.